maybe the most important thing I see today is called the NOB spread. It's 30s minus 10s. Nobody's probably going to trade it there. It's not something that a lot of outsider retail trade, but insiders love to monitor it for one reason. The wider it gets, and it's the widest it's been in 4 years, the wider it gets, that usually sets up the notion that longer duration Treasury yields will be stubbornly high compared to the rest of the curve. So that's why we watch it. And I continue to believe that I'd like to see the Fed ease a quarter point step, Brian, because I'd love to see what the yield curve does. My guess, if they cut 25, the yield curve steepens 12 basis points.
Interesting. So that's what Rick Santelli has to say about that. So here's how I want to break it down for you. But basically what he's saying is the long-term treasuries are going to stay higher for longer. And that's what's basically mortgage rates kind of go with, is they follow. If you ever talk to somebody, you ask them where mortgage rates are going, they're like, oh, follow the 10-year treasury. Okay, so let's check on that. So what is the NOB? Basically, he explained it. It's the NOB spread, notes over bonds, is the difference between the yield on a 30-year treasury bond and a 10-year U.S. Treasury note. Okay, today's number as of August 2025, 10-year yield is approximately 4.3, and the 30-year yield is 4.9. That's a difference of 0.6%. And this is where he was saying. I hope you guys can read that. Let me see if I can scroll that in a little bit for you. So Rick was saying that's the highest it's been in 4 years. So what does this tell us? A widening spread usually signals expectations for a stronger growth or high long-term inflation. This may keep rates elevated and narrow spread. Okay, so that's what the widening spread. He's saying it's widened, and it's the widest it's been in 4 years. So this is basically telling us long-term yields right now are going to be halted. Okay, so what does it mean to hear mortgage rates? In the short term, mortgage rates are likely to stay elevated, but could stabilize. Long term, now here's where that coin flip comes. If the spread narrows, mortgage rates will begin to ease. If it widens, mortgage rates will go up. Well, obviously. Okay, so that's what it's saying. So where it's going to go from here, well, that's what we're going to focus in on. So if I ever explain to you guys now what the NOB spread is doing, I'm not getting. It's actually the difference between the 30-year Treasury and the 10-year Treasury note. So that's what the NOB is. So that's our lesson for today. So now let's get over to what the markets are doing.